First video of 2025. Welcome back, everybody. So let's get right into it. This video, we are going to talk about some predictions and stock picks, not from us, but from other experts. Of course, we will give our responses to some of them. Too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description. So some predictions, of course, we have to talk about GDP. So earlier in the year, roughly 5% was estimated for 2024. I think that is quite reasonable. Seems like it. Of course, 2022, 8.7 was partly due to EPF withdrawals. So, without that, then you can see 2023. But I'm going to play it safe. I'm going to say I think 4% is probably going to be where we end up. A little bit higher than last year, but 5% might be slightly too high. But if it happens, whoever's predicting 5%, I don't think you are being unreasonable as well.
Yeah. And also for the KLCI index, a lot of the analysts are very bullish. You can see that the last closing for 2024 December was around 1,624, if I'm not mistaken.
42, you mean?
42, yeah.
Right.
So now they are predicting like a 4 to 10% increase by end of 2025. And we shall see whether they manage to realize these targets.
Yes.
But another prediction that they say is there's a couple of sectors that will be posting out strong earnings growth. So number one is EMS, which is your tech guys, those box build guys.
Yeah, quote unquote tech guys is not exactly tech. Yeah. It's just smaller components.
It's just assembling services guys. Box build, all those things. So EMS is also part of tech and another technology also. So they included that. I think this one is more towards the OSAT, your ATE, your front end guy support services. And then also they did mention rubber gloves. So rubber products are going to be growing more than 100%. This is coming from a low base because they were announcing like very low in terms of export. So right now the demand has been kind of normalized already, and they are projecting that there will be a higher growth. So it's only these three sectors that is going to be posting a very, very strong growth. The rest is all still quite decent also, double digits. That's why most of the analysts thinks that 2025...
The year will be good,
basically. It's going to be good. So some of the stock picks by these analysts.
So this is the KLCI, right? The largest companies in Malaysia.
10 billion to and above for their market cap.
So the top three would be Dialog.
Yes, Dialog. You can see also there's Genting and Genting Malaysia.
Okay, Genting.
Yeah, the reason I think why they chose is because they were excluded out from the KLCI, so there was a massive sell-off.
So it's a bit like they maybe the analysts are hinting to us that it's unreasonable to sell off that much just because it's out of the index.
Yeah, and they think that there will be some sort of rebound from the bottom. Same thing for Dialog also. So this also company has been going towards its quite some few years lows already. And one company that they call a sell call or downside is basically Hartalega,
which is very weird because they are predicting a jump
they're predicting a jump in the sector growth, but I think it's because the valuation may be flat to ahead of their fundamentals. So that's why they say that I think to be conservative, it should be down.
So, but to me, this is one area I would disagree with, because you could have applied the same logic in, let's say, 2020, right? When Hartalega has always been the highest valued company among the big four, at least. Yet it still rose, right? Maybe not as much as Top Glove, but more than, say, Kosan, right? So I mean, it could very well happen that Hartalega is the only underperformer among the glove stocks, assuming gloves rise. But I think it is more likely that they will rise alongside everybody. You could build a case that unlike COVID, people are more rational this time because a lot of people got burned from all that. So if it's more rational, what could happen is that Hartalega will rise less than everybody else. That is, I think, more reasonable than to say that there's no upside and it's pretty much a sell call by the analysts.
Yep. Now this is the big cap. Mid cap one, this one is your 1 billion to 10 billion.
So your Yinsen, Citos, Dayang.
Yes. So Dayang one is the most that they think that you will go up the most. I think it's because if you look at their results, has been very good already. It's like up nearly 2 times in terms of earnings, but the share price didn't really budge much. So that's why they think that there is further upside. And it's pretty interesting to see that they are all very bullish on the oil and gas sector.
But again, it's very funny. Now they're saying Kosan is also negative upside.
Yes, correct. So basically, they are bearish on the glove sectors for the analysts that actually compiled these.
But just
PPs.
2 slides ago,
2 slides ago, this one is more towards again is the valuation.
The earnings,
valuation.
So they basically what they're saying is, look, I think if you are predicting 100% earnings growth, in 2025, I don't see how the share price will not.
I think it's the share price already rallied already,
right?
Because Harta Lega and Kosan, they both rallied 160% from the bottom.
I see.
So they're kind of like priced in already for the recovery. So right now it's like what's next, right? Whether they can improve in terms of demand.
Okay.
So that's why they're putting.
The only one here that I wouldn't say I disagree with, but I have the most question marks on would be Bermas Auto.
Oh yes.
So there's so much competition, especially coming from EVs. Not just abroad, actually, locally. Your Perduas, your Proton Emo.
Yeah.
How are they going to compete?
This one is going to be a very, very tough one. But the reasoning why they included this and why they give such a high target prices is because it's coming from a low base also.
Yeah, so it's down. It's down 20 a quarter, right? Last 52 weeks.
Correct. It's like kind of like an all-time low. It's similar level, almost similar level, going to a COVID level. So that's why they think that this sell-off is a little bit too much. Okay, small cap. A lot of companies, this is I think one of the category that they'll be focusing more on. Small caps company, you can see that there's a lot of names over here.
So Notion, interesting.
Yeah.
Okay.
This one is only by 2 analysts, to be fair. So one is Hong Leong Industry. They think that it's a 2x.
So it's up 4 times over the past year, and they think it's going to double again. So if they are right, it means that over the past 2 years, they think Notion can go up 8 times.
I think it's also because of the number one they say is HDD, and the other one is their diversification towards the aluminium extrusion. So Winstar Capital, that one did very well for this coming IPO. They are also related to aluminium extrusion. So maybe this is one of the sector that you may want to look at, aluminium. So and then you can see there's also another couple of names over here, and if you want, you can pause the video and check out the names. So in summary, most of these analysts are picking all-time low companies. So your Genting, Baotou, Dialog, Citos, you can see already they are all just choosing companies where share price actually just got hampered a lot. That is their top picks for the 2025. Now, the second one is that they are bearish on glove. This one have to do with their valuation. Now, what's interesting is that Xifu has this fundamental mapper over here. You can see where is the gloves are at in terms of your investment risk and also your business fundamental. So for business fundamental, the right side here is good, left side here is poor. For investment risk, the downside is low and top side is higher.
But as we always say, guys, I think a screener is just a screener. It helps point you in a certain direction. But as an investor, you always have to check the individual companies because these are based on certain metrics. And sometimes these metrics are captured by software, but you need to check, whether, for example, maybe you think the PE is very low, but then actually they had a once-off earnings boost, so it doesn't really reflect the valuation. So these screeners are a great starting point. Do check them out, but always remember, do a bit more work, guys.
Yeah, and also just to share a little bit, maybe why the analysts are quite bearish, right? You can see that they place Harta Lega and also Top Glove at the, I'll say, below the poor, almost at the poor category over here, just about to improve their fundamentals. So they are still trying to say that there is still some sort of a time lag in terms of their improvement, where their earnings, whether they can get back to pre-pandemic or not. So this one, they are quite uncertain.
Another thing I want to say about gloves as well, and I don't have very strong thoughts on them, but I do want to add this point. There has been recently new outbreaks in China. Again, it's a respiratory disease. So they're a bit on high alert. The news is, as of this recording, probably about less than a week old. If you recall, when COVID-19 hit, the first 2 weeks, I remember in December, no one was really paying too much attention. So so this might be something you guys can look at. I do not foresee that there will be some sort of like repeat.
Yeah.
I think lockdowns are going to be really difficult. I'm not sure how the economy is going to handle, but yeah, something to take note of, guys, for gloves.
Now, the third one, it is oil and gas. You can see the names Yinsen, Dayang, Wasco, Usman. They are very bullish on it. Now, this is where they are plotting at. Basically, most of these companies, surprisingly, they are all still like under a poor category of business fundamentals, but except for Dayang over here. So that's why actually you can see why the analysts are very bullish on Dayang is because they have a low risk investment risk. I think investment risk can be also be put as a valuation. So they think that Dayang is very low value and their fundamentals are pretty decent. So that's why they think there's a much higher upside for Dayang as compared to the rest over here, Wasco, Usma, Yinsen. But they are all scattered around at the low investment risk, which is pretty interesting to see. Maybe because of valuation, because like ESG is an issue, right?
Yeah.
So valuation is low. But they didn't really take account of the green energy, the green sector.
Yeah, so this is again understanding the chart in context, right? Investment risk here would mean the valuations are lower, but you always have to ask yourself the quality of the earnings. Now, when it comes to oil and gas, it's a very interesting conversation. On one hand, yes, there's the whole green energy wave, and oil and gas is a thing of the past. On the other hand, the bulls are saying no, oil and gas is here to stay.
Yeah.
So depending on what lens you look at this situation, you have different answers to why these companies have lower investment risk. And of course, if you genuinely have conviction that it's the green energy is going to wipe out or at least greatly reduce oil and gas reliance, then in fact the investment risk should be higher.
Yes.
But if you think that no, actually we're here to stay, maybe there'll be new aspects of the economy that requires fossil fuels, then in fact the investment risk is low. So it all really depends on your answer to the question of is oil and gas here to stay.
Yeah. Okay, last one. The only company that they put 100% upside is Notion. But please take this as a pinch of salt because you need to think whether Notion's new business can they like bring up their earnings, like can they double or triple, right? So all of this is still uncertain at the moment. And Notion has been known to like have been very gung ho about their company, and they are trying to like boost up some of their brand into the social media and all the stuff.
Yeah. So our intuition is always that when a company is highly promotional, doesn't mean that it's a bad thing or a good thing. We've seen companies that have done well where the CEO is promotional. However, we have also seen the opposite very often as well. So you want to just take note that whenever you always ask yourself, whenever a company is very promotional, what is the agenda? Is the agenda legitimate? Sometimes it's legitimate, sometimes it's...
Okay, so here are some of the fund's activity besides the stock picks. You can see that the fund are actually building up their, actually they're building a little bit from low.
Well, it's dropped from 2022, but it's slowly going up a bit. Yeah.
Yes, exactly. So right now they are going a little bit of a conservative mode, but then some of the funds also did mention that they have excess cash to redeploy back to the market because they just got more deals, so to speak, from their privatization activities. So potentially there will be some funds will be pouring into the Malaysian market for 2025, but we shall see how would they do it, or maybe they can even stockpile more cash in the future. Now, this is their exposure. This is a very interesting chart. Basically, technology sector as an AUM is very low. What this tells you is that the funds are selling off technology. They are holding less tech companies. There's also a reason why, from our discussion with our research analysts, is that the OSAT and ATE players are kind of like lagging behind the fundamental that is growing around the AI and data center trend. Yeah. So they require a higher advance, like your advanced packaging or whatsoever tech, and also human talent. That's also another thing. So why our OSAT and OSAT guys especially, why they are lagging behind is because they are not really spending much money on R&D, research on development, and also retaining engineers for their whatever services that they're going to be providing. So we are hard stuck at providing services for the smartphone, for the automotive, for the PC. Basically, very
EV, yeah. Things like that.
very 2021, 2022 trend.
Yeah.
It's not really much of an AI. So AI, you have to service a much more higher, more complexity, more higher
The
value
only
kind of
the only
stuff.
guy I think in Malaysia's Frontcan, that's the only guy that's
Yeah,
really
correct.
have a bit more direct link.
Yes,
Yeah.
indirect link in terms of the chip. So yeah, that's the and that's the also reason why big funds are actually buying more Frontcan instead of buying other companies. But who knows, right? If let's say the valuation turns out to be very low,
Yeah.
it could be
But
an opportunity.
on average now, the I mean, it's not same for every one of them, but among the three big, the two big sectors, AT and OSAT, the valuations for the average valuations for companies in these subsectors, is 20% higher than the 5-year average. So we are still at they're still valued quite highly, even though I think some of the prices have dropped quite a bit.
Yes, exactly. So yeah, maybe it could be the case that you stay low, or maybe it will start to increase. Right, we'll never know. Another one is consumer. So the sun is also kind of lagging behind, and it includes plantation. So Invest Bank, they think that the next sector to focus on is actually tech stocks and also plantation stock. That is basically their own opinion, because they think that it's still pretty undercover and unloved sector. So foreigners, they have been a net buyer for industrial products, plantation, and also property. Property, I think, is more towards the data center. Whereas for local institution, they are more focusing more on the financial service. Because foreigners are the net sellers for financial services, so
it.
somebody needs to absorb it. But yeah, why we want to pay attention to foreigners is because number one, obviously their ownership has been quite low already. If you compare to like previous years, right? It once was quite high, around 20+%. Now it dropped down to below 20% already. So this is one. They have quite a low ownership. Number two is because they have a power to actually influence the market by a certain magnitude. So let's say if they only pour like few billions only, it can actually be a net gain for our local market. So this is basically an example or an article that we actually posted in our Firebright. So it is free if you want to read all of these interesting newsletter that we post once a week, or once to twice a week. You can check it out. Links in the description and comments. But anyway, this one is just to tell you that when they sold 23 billion worth of shares in the stock market, it can cause like a 90 billion drop. So that's like a 3 times magnitude drop in the Bursa market cap for the companies here. So basically, just to tell you, their power to influence the market movement is very, very strong. So that's why foreign funds, when you see them buying certain companies, right, that's also why it went up so much. Possibly it's because of these big funds, which is by the foreign funds. So yeah, that's why we are paying attention to them. Now, this is the final thoughts. Basically, just to sum up everything again, analysts are picking all-time low stocks. Don't know whether this is a good idea or not. Probably it's bad because it need to depends on the fundamentals. Now, sectors that we are watching, it is plantation, data center, and also oil and gas. Now, not every oil and gas. Certain oil and gas companies that are going through some sort of corporate exercises.
Yeah.
That is what we are looking at. Data center will be still here to stay. You can see that today and last week's share price that is related to the data center, they all have kind of like have some sort of momentum and they are all going up. Plantation, these are still kind of like unloved, but they are going to be posting out their quarterlies next month. So, and CPO prices for Q4 is very strong. I think it's like around 5,000 at that point of time, 5,000 ringgit per ton. So most of these upstream plantation will be posting strong earnings for that particular quarter. Can maybe look forward to these three particular sectors. And last one, you can see that we also did some sort of like allocation for Fire Pro over here. So if you are interested to know what did we buy or sell last month, you can check out Fire Pro. The write-ups, whatever companies that we are focusing on or whatever companies that we are interested in.
About 50% up so far.
And we are up 51%, and also the boring portfolio is up 14%. This one if you are more towards a dividend person. But anyhow, how you want to see what is our latest allocation, it is inside Fire Pro. We will notify the members over there at real time. And if you want to know basically how we analyze companies, how we assess risks, how we analyze management, all of those good stuff is inside FirePro. It's a growing course,
Community as well,
community, and also information. It's just like it's never ending lah.
It's what we're trying to do is a bit like a spider web. So the way spiders catch flies or any insects is they build the web, and the minute they feel a vibration, then they know food is near. So similarly, our food is investment, you can say ideas. And we have a network, a spider network of different analysts, different investors, management, employees at various different industries. So every time we feel some sort of vibration, we'll let people in our community know.
If you want to check out our free sample on how we write our write-ups, the links will be in the description and comments. And that, welcome back, guys. We are finally filming again.
Yes.
And hopefully to see you in the next video.
Bye-bye.
Bye.